Good morning, ladies and gentlemen, and welcome to the show. Listen, we all know this crisis has been coming. It's been slowly building over the last few years, while I've been doing these reports, but it's finally getting here. And it looks to me like the crisis is going to begin in November. I mean, really earnestly. Disintegrate. Everything's it's going to be a mess, Prepare for it. Anyway, let's get started. Let's open up the charts right here, and let's take a look at the gold price today. We're just entering into this bull market for gold and silver. It's just beginning. This is the initial state, and in the initial stages, they're still trying to smack the price down at times. We had a little flash crash in silver. Let's take a look. Right here, I want to show you guys. Little flash crash in silver. See it right here? I think they tried to smash the price down, and I think it bounced straight back in their face. I think that's what happened, And they got it down to about 16.25, down about 10 cents, and it bounced straight back up again. Not Bitcoin, but gold and silver, they've been in this bear market so long, and they've been smashing the price down so long. And now the whole thing is it's just slowly, very slowly starting to turn bullish again. But, I think this is going to be a long bull market. I don't think it's going to be a quick move up. I think it's going to be more like a steady up in price. I'll tell you what. By the end of this year, I'm expecting gold to be at $1,500 or higher. And I'm expecting silver to go above $20 by the end of this year, and that's what I'm expecting. So, buying gold and silver, I think it's just going to be a steady price creeping upwards over the next number of months, while the Fed they're behind the curve, while they try to get ahead of the curve. They're going to drop rates. I think they're going to drop 25 basis points in this next cut. Let's take a look at cryptocurrencies right now. See what they're doing. Cryptocurrencies right now, I think, are preparing for another uptick in price coming very soon. But right now, let me just refresh the page. It looks like $264.4 billion with a Bitcoin dominance of 64.5%. And these coins have been going sideways for a number of days now with a slight downward tilt. They've been very slightly going down, but I think there's kind of a hard bottom under it at $8,000 for a Bitcoin, and I think there's an awful lot of support there. I really don't think we're going to make it down to that during this little period right now until it starts to go up again. I think the next leg up is probably going to take us up around 16,000. That's what I think is going to happen. Now, that's my personal opinion. Don't use that for financial advice, whatever you do, because I'm going to tell you, cryptocurrencies are possibly the most volatile asset out there. I mean, you're really risking your money if you buy into cryptocurrencies. It's a risk. It's a real gamble because of the price swings, especially if you're not planning on hanging on to it long term. Now, it's not so much of a gamble, I don't think, for the people who are going to hang in there year in, year out, and just not sell. They're just going to buy a Bitcoin or whatever, and they're just going to leave it in their wallet for years. Maybe they're thinking 10 years in the future, I'll sell it. For them, it's not a gamble, because 10 years in the future, I believe that Bitcoin is going to be worth a lot of money. So HODLing is okay, but if they don't even watch the markets on this short-term volatility that we're going to go through, and I think we're going to go through an awful lot more volatility with Bitcoin before Bitcoin finally gets where it's going. Let's take a look now at the stock market. The stock market I would consider it riskier than Bitcoin at this point. You know what I mean? Quite seriously. We're up 48 points on the day so far, 27,197. Let's take a look at the one-day chart. Yeah, it's swinging upwards today so far anyway. Let's take a look at it out over 5 days. Going along fairly steady over the last 5 days. A little price drop right there, but it's going along fairly steady. It's up a little bit today, though. Now, let's take a look at crude oil. Crude oil is $56.28, and it's up 0.8%, 8 cents on the day, up 0.14% on the day so far. That's for sweet light crude. Let's take a look at U.S. Treasuries. Now, today is a bad day for Treasuries. A bad day if you like yield curve inversions. Today's a very good day. We got the short end of the yield curve rising, right, and the long end falling. 2.8 basis points on the 10-year fall, and a raise of not quite 1 basis point on the U.S. 1 month. So today we got the yield curve inversion getting worse. It's getting worse, this yield curve inversion today. And we've had this yield curve inversion for a long time. The only holdout is the 30-year. 30 years went down over 2 basis points today so far. So, and the 1 month is rising, and the overnight rates, everything. But here's the thing. They're going to be cutting rates. So now let's take a look at the U.S. dollar index. 98.10. I'm going to tell you the dollar's getting too strong. It's getting too strong. This could cause huge problems within the financial system. But how do they get that dollar strength down? Trade wars haven't done it yet. And you got to understand that the dollar's pegged against the euro. Euro is the biggest part of the basket that makes up the U.S. dollar index. And so the euro is got to gain strength to help the dollar to become weaker. The euro has to gain strength, And Mario Draghi, he's going to basically print the euro into oblivion. And so they got problems here. They got huge problems. There's basically a currency war going on right now. It's not just a trade war, it's actually a currency war. And we have the countries all wanting to devalue their currencies as fast as they can. It's a race to the bottom. Okay, at this point, it's a race to the bottom. Let's take a look now at... here it comes, the most important week of the year. The most important week of the year is finally here. When an edition of avalanche of economic data, including U.S. payrolls, the European PMIs, the BOE, and the Bank of Japan announcements, and the restart of the U.S.-China trade talks, we are in for a historic treat, with the Fed set to cut rates for the first time in over a decade, effectively ushering in the next recession. The United States economy contracted within 3 months of the first rate cut in the last 3 economic cycles. This time it won't be different. And yes, I expect they're right. The United States economy, they start cutting rates, it's going to start to contract. Now the big thing here is this. This is big. Boris Johnson. He's got elected over there. And he's not bluffing about a no-deal Brexit. This is going to carry the United Kingdom and Germany into a very bitter, hard recession. That's what it's going to do. Quite seriously. Says Boris isn't bluffing. Every action, every appointment, every word since he entered into number 10 signals the same thing. Britain is leaving the European Union on the 31st of October. Now, I'm going to tell you guys, this is the reason at the start of my show I said November is the month. 31st of October. They're going to leave the European Union. Deal or no deal? Probably not a deal, because Brussels is going to take a hard line, I'm pretty sure. This is going to trigger the recession worldwide. It's going to trigger the recession in Germany. Germany's practically in a recession now. Okay, these are 2 huge economies. The United Kingdom, Germany, 2 huge economies. The United States, as soon as they start making these rate cuts, they're going to start rolling into a recession. They're going to start having... the whole world's going to go into a recession at the same time. And this is going to be huge, because we've got things within the system that are ready to turn over. Things like Deutsche Bank, just barely holding their head above water right now. And the derivatives, the world's the derivatives in the world, that it's a market that's ready to explode. The United States corporate bond market is ready to explode. The real estate markets. Here in Canada, the real estate market, unbelievable the amount of debt that they've issued on house mortgages here in Canada that's tied into these banks up here in Canada, and these banks here in Canada are tied into the banks in the United States. It's all tied in together. We have a world economy now. And so as the whole world starts to sink, well, they're going to want lifeboats, aren't they? Biggest lifeboats, gold and silver. Cryptocurrencies is going to be there for a lifeboat too. But when cryptocurrencies gets a bit too powerful, the government's going to try to show their might and show how they can control it. And this is going to negatively affect the price of cryptocurrencies. But how high will Bitcoin and cryptocurrencies get before the government really cracks down? I think it can grow considerably larger than it is now. When they finally try to crack down, they can't stop Bitcoin. They'd have to destroy every computer on Earth to stop Bitcoin. But they can affect the price negatively. But that won't last either. Because Bitcoin's deflationary, eventually it'll break free of that and start to go back up again. Even if the government cracks down. The government, listen, if the government could stop Bitcoin, they would have stopped it already. It's not that easy to stop it. Eventually it's going to win. Gold and silver is going to win too. This is a thing that a lot of people can't get through their head, is that there can be more than one winner. People think it has to be and or. It has to be either gold or silver or Bitcoin, and both can't win. Yes, both can win. There's enough liquidity in the world for both to win, both asset classes. The big loser is going to be the dollar and the other fiat currencies. Massive losers. It's coming up. And this is going to cause the world to turn on its head. Everything's going to be different. And it's going to happen fast. Once this recession gets going, this is going to be what triggers it all into happening, and it's going to happen really quickly, folks. We're getting into some really turbulent times coming up very, very soon, when there's going to be a lot for me to talk about very quickly. Things are going to happen so quickly when this all starts to really happen that it's going to be hard to keep up with it all. Thank you guys for listening. Like and subscribe, and give me a thumbs up. And thank you for watching this show. And I enjoy producing videos for you guys. And I'm going to be here right through the crisis, reporting on the crisis as it unfolds in real time. Thank you guys for listening, and we'll catch you in the next show. Bye-bye, guys.